How's it going, everyone? It's Sam. Today we have to take a look at why your portfolio is down. There's one major thing that's bringing it down right now in crypto and in stocks. We also have to look at it moving forward because it will affect earnings season. We also have some big news coming out from Britain, and we also have to take a look at some cryptocurrency news that could definitely affect your portfolio. Some interesting things happening, along with a couple stocks that have introduce some big news as well, and it can affect you as a consumer as well as an investor. So if you don't mind hitting the like button and subscribe button, I appreciate that. If you like these videos, consider hitting that subscribe so you can see future videos too. There's also a link underneath the video to get a ton of free stocks. So with moomoo, when you sign up and deposit $100, you can get 5 free stocks. And then if you have enough to deposit $2,000, you can get 15 free stocks overall. Now, the overall crypto market is just up slightly. Now, not too much has happened over the weekend in terms of crypto. Bitcoin's up a little bit over the weekend. It went down to about 18.7 or so, holding up pretty well above the support that we had seen last seen in June. So we had hit about 18.1K last week after the Fed meeting, but we have been holding above that, which I think is pretty positive considering everything that's happening in the market, and with stocks touching down near lows from the summer as well. I think it's pretty good that we are still seeing Bitcoin around 19,000. Now we could always fall further, but that is pretty positive so far. The market for the stock market is actually down a little bit here today as well. Nasdaq's up slightly, but S&P 500 and Dow are both down about 0.5%. And there's one big reason for that we'll talk about here in a second, but there is a big event coming this week. We have PCE coming out on Friday. Now, we did see it come down to 6.3% last month after hitting 6.3 a couple different times back in May and April. So I think it will be positive, obviously, when we come down under 6.3 because we've seen it above that for the last 4 or 5 months. If we don't see inflation come down or PCE come down this month, we probably will see it next month as CPI numbers also come out here in a few weeks. Now, one thing that has been on an absolute rampage, which has been just destroying portfolios, is the DXY. This is a dollar strength index we've talked about a lot here on the channel. It's up to 114.1 here today. This is after being just at 90 back in May and June of this year. When Jerome Powell spoke, we had actually pushed up pretty drastically from about 107 up to 110, and then we saw some more strength over the weekend, obviously, as well. This is due to several things, obviously, but a lot of it's just coming down to inflation. There's inflation everywhere in the world, but the U.S. is taking a pretty hard stance against it, raising rates pretty drastically compared to some of the other currencies that really really compare against the dollar and give us this DXY value. And British pounds just plummeted against the dollar as well. This is one of the currencies that they use to get the DXY. So this drove down drastically to just about 1.03. This was after a huge dive on Friday as well, 3.6%. So we fell even further, a 5% plunge after a 3.6% plunge. This is because they announced on Friday that the UK would implement the biggest tax cuts in 50 years at the same time as boosting government borrowing and spending in the face of high inflation. So many different countries are facing this high inflation, but we're also all facing this kind of recession, depression that might be coming as well. And the UK decided that they needed to start using tax cuts and boosting government borrowing at the same time that this inflation is going on, which obviously is hurting people's belief in the British pound. So it's falling pretty drastically. We already know the euro is worth less than the US dollar as well. So this is really pushing up the DXY right now to really high levels. Now, this hurts your portfolio because typically what we've seen is Bitcoin falling down when the DXY moves up. They're kind of inversely correlated. And we also have seen that in the stock market, it generally happens as well. If we do see a spike in the DXY, it can negatively affect stocks. Now, a lot of that's because the US stocks are global. A lot of these large companies that we talk about are global companies. And when we see the DXY go up, the dollar go up, we're denominating everything in dollars, but they also have a lot of their revenue coming from other areas. That's why we saw a lot of companies talk about constant currency last quarter, because we already were seeing the DXY go up. But now I think it will be a huge effect on some companies because, again, we're denominating everything in US dollars, but their non-US dollars, their other currencies, are going down in relation to the dollar. So if some currency falls 20% versus the US dollar over a quarter, or 10%, let's say, it's obviously going to give them 10% less revenue in US dollars. So that's something to pay attention to for the next earnings season. Now, we also got the weekly crypto asset fund flows report. We saw slight inflows. We saw Bitcoin at 2.6 million, Ethereum, some money flowing in after last week and the week before, I believe, having some big flow out. We have seen about 71 million coming out of Ethereum. A lot of people just selling, or a lot of these big institutions selling, going into the merge. But now they're starting to see that the merge went smoothly, and probably they're funneling more money in, because we have seen quite a positive reaction overall, or a positive result from the merge. So when we look at ultrasound money, we can see that there have been about 8,324 new Ethereum hitting the supply since the merge. Now this is as of 11 days ago. So we have seen some new Ethereum for sure, but when you compare it to where we would be with proof of work, you can see that we've only inflated the supply about 0.22% per year annualized, and it would be about 3.81%. So we would have about a 20x inflation rate compared to where we're at now if we hadn't gone through with the merge. Right now, we'd have to go through about 3 more Bitcoin halvings to be able to get down to Ethereum's issuance rate. So I think that is quite bullish on Ethereum long term. Now, we could always go through some more pain in crypto, but I would definitely keep your eye on Ethereum if we do get around that $1,000 mark. Now, we did get some interesting news from Amazon. This affects not just Amazon investors, but also people that use Amazon Prime. They announced a second Prime Day amid slowing growth and high inventories. Now, I love Amazon. I love using it. I think they actually make life a lot better for a lot of people due to the fact that you can get anything you want so easily and so quickly. And they've been announcing a lot of positive news. So I know that they've been beaten down recently, but take a look at this. So they announced that they would hold Prime Day on October 11 and 12. This is the second time this year, and this is the first time this has ever happened that they've announced 2 Prime Days. They also announced that they're going to acquire iRobot last month to kind of help with that continuity in your home, right? They have a lot of different technology already, like the Echo Dot. They're trying to build out this suite of home products, and it's going to be able to use your data to map out your home and provide them even more information, which is going to be really beneficial to advertise to you, which is pretty interesting. Maybe not what you want, but it is positive for the company. They also announced that they are going to be giving you some good deals on Peloton during this new Amazon Prime Day. And this is after last month they announced that they're going to work with Peloton. This is after Peloton had been pretty difficult to work with. They didn't really want to put anything on Amazon because they wanted to do everything themselves, be able to rake in more money from that. But I think what they noticed is that they just can't compete with Amazon if they do that. It's so much easier to put your products on Amazon. And they already had a ton of people searching for Peloton products on Amazon, so they're just missing out on some sales. So that's really bullish too. Companies realizing that they really just can't compete if they're not on Amazon. They also are facing some tougher year-over-year comps. So they had really good sales back during COVID, obviously. Now more people are going to brick and mortar stores, but they still grew last quarter. Not too many companies are growing right now, but they still had about 7.2% higher sales last quarter than the year before, which is still positive. They also announced that they're going to raise Prime subscriptions from $13 to $15 a month, which is positive as well. They have pricing power, which is something you really want going into this kind of recessionary time that we're in. They also announced that they had the biggest 3 hours of signups for Prime during their exclusive NFL stream. This is just last week. So One thing that you have to pay attention to is we typically don't see something condensed to 3 hours for Amazon Prime, like some kind of Prime event. When you think about the Prime Day, it's over 24 hours or 48 hours. It's not condensed in such a small period of time. So I think some people don't really think about that when they hear this news. But I still think this is positive because this is a group of people that will start using Amazon Prime, will start buying more through Amazon, and then we'll start using more and more of their products as well. So these might be people that had never really tried out Amazon, like football players that maybe aren't too techie, or football fans, that aren't too techie, maybe older generation. But now they're going to start trying out some of their products, and they're going to realize, hey, I can order something, not have to get up. I can do it right during the game, and it's really easy to use. So this is part of an $11 billion, 11-year exclusive streaming rights deal with the NFL. Now, I think this is where a lot of people don't like Amazon, is because they don't see some of the earnings per share numbers. They think it's a little bit too expensive when you look at it at a price to earnings ratio. But people don't understand that they really just try to funnel everything back into the company. And that's why so many people hate Amazon too, the people that aren't investing in it, because they hear that Amazon didn't pay any kind of taxes last year, small amount of taxes, right? But that's because they keep on reinvesting in the business. Just like if you had a business and you were losing money, or you were putting all your money towards marketing or building or buying stuff for the background of YouTube videos, right? You could continue to reinvest in the company, not show any profits, and then you could continue to grow to be able to make tons of money, but you haven't actually had to pay tax yet. So that's something to consider with Amazon. Stuff like this, where they're reinvesting in their company drastically, right? $11 billion, but it's over 11 years. Think about how much they'll bring in terms of subscription revenue over 11 years with an exclusive streaming rights deal with the NFL. Obviously, a lot of people are going to want to watch that. A lot of people are going to sign up for Prime because of that. Now, their stock price has gone down pretty drastically. If we look back from November of last year, it's down 37%. Now, it fell down to about 44% back in May. We were around $104, which I think was a blessing for anyone that was buying. I know I was. I've been buying all year, but it's pretty discounted, right? We could always fall further, but you can't look at the price to earnings ratio with Amazon. They just funnel so much money back into their business that that's not really a relevant statistic. And then we do have to talk about Twitter and Elon Musk as well. Tesla, they are actually having their depositions starting at 1:30 p.m. today. So by the time you're watching this, they're probably starting. And it's going through tomorrow and maybe Wednesday. Now, I think this is going to be pretty bullish eventually for Tesla, because so many people are worried that Elon Musk is going to have to pull out so much money to put in this deal. It sounds like he really doesn't want to do this deal anymore. He tried to get out of it, obviously, for so long, but I would guess he would be more likely just to pay the $1 billion fine. He has the money anyways, than to go through with this deal. And Gary Black also says, we often see settlements just before or after key depositions. This is because each attorney can see what the other side has by their questions of key witnesses. Twitter may agree to settle to reduce uncertainty of post-trial appeals and allow Twitter's business to move forward. This would be really interesting. This would take away the big overhang over Tesla's business, and I think would be really bullish for Tesla. I think we're going to see Tesla's price go up pretty drastically when when all these Twitter issues are over. So just consider that. It might be an interesting time to dollar cost average into Tesla, or to be buying Tesla. I've been talking about Tesla in a lot of videos recently. I talked about it as recently as yesterday, and how I thought it was a big buy because of the energy crisis, as well as everything that everyone always considers. So definitely pay attention to Tesla, especially this week with these hearings. Let me know your thoughts on all this underneath the video. Thank you so much for watching. Check out the link to moomoo to get those free stocks, and I'll see you in the next one. Bye.